Hi, today I'm going to be sharing how to buy a buy-to-let house under a limited company. Now, the very first thing you need to do is to register your company with Company House. You would have to pay a fee. I think it's about 20 to 30 pounds or so, but it is quite straightforward. So you register your company, you go online, just Google Company House. I'll probably put the link somewhere in this video. You register your company, pay your fee, and in a couple of days, you'll get your email that your company has been registered, and we- and you can take it from there. This is the very first thing you need to do when you are buying a house or a buy-to-let house under a limited company. Now, the next thing you need to do is to open a business bank account. Now, there are a lot of banks out there offering this service. As a matter of fact, immediately you register your company, there will be loads of banks trying to reach you for you to come and open a business bank account with them. Why? Because obviously they need your money. So there are lots of options out there, and you can choose from many of them. All the banks have business bank accounts, so I think that's something you can do easily. Yes, sometimes they might ask some questions. They might want to know your company details, what you are doing, what the company will be doing. Those are the kind of questions that the bank is going to be asking, just to understand what your company will be doing. Obviously, they don't want you using your bank account for fraud, for anything like that. So that is the main reasons why they will be asking lots of questions. And of course, they are very happy to open a bank account for you for any legitimate business. So I think that's quite straightforward. So once you've registered your company, you've opened your business bank account, and the next thing you can start to do now is to start to view properties in your area or the area you are interested in. Mind you, there is a condition for getting loans or mortgages for buy-to-let houses. Now the condition is that you yourself have to own your own home. You must have a home. You must have one, or you are currently paying mortgage on one. So that's the condition. Otherwise, you won't be given loan by any lender or provider. So that's a very you have to be it you yourself have to own a home. You have to be a landlord. So you go out and start viewing properties that you're interested in. This can be tedious, obviously, because you are not the only one looking for properties. But when you then find a property and you've been given the approval to go ahead, that you've been given consent by the landlord, by the current landlord, excuse me, that you are going to get the property, then what you now need to do is to contact your broker. Again, there are a lot of brokers out there, or mortgage companies or mortgage providers, rather, or mortgage agencies out there to contact your broker. Now, typically, the kind of mortgage you get on a buy-to-let mortgage, or kind of interest, sorry, the kind of mortgage you get is a 75% to 80%. Now, some of them do 80%, and they only do 80% at the beginning to help you out, because when you are starting, they know that you need a lot of support. So many of them, excuse me, do 80% mortgage for you. Basically, all you need to look for is 20%. Now, what usually happen is that for your first three properties, they are willing to give you an 80% mortgage because they are willing to support you. Isn't that fantastic? So when once you now reach number three, then they no longer see you as somebody starting out. Then going forward, then they start increasing it to 75%, meaning you need to look for 25%, and which is fine because by that time you now know the game, you now know how things work, so you are more comfortable, there's more money coming in. So in the beginning, there are mortgage companies or banks out there that are willing to give you 80% of your mortgage, which I see as very good and very good support for people who are starting their business. So you contact your broker with the intention of getting an 80% mortgage, and that process continues or goes from there. The broker knows what to do. Now, hi guys, thank you for watching this video. Now, if you like this video, please subscribe to this channel and also like the video. Now, when you subscribe, it will help you receive notification when I release more videos. My plan is to release more of such appealing and interesting videos. Now, if and that way, these videos will be able to reach more people that need this information. Thank you for watching. As you have contacted the broker to help you look for mortgage providers, at the same time, you need to contact your solicitor to let them know you are about to buy a property. So if you have bought one before, then you can always go back to them. And then you can always shop around as well because they all have different fees. So try to look for the ones with the lower fees because at the end of the day, you don't want to be spending lots of money. So now, after contacting the solicitor, what you then need to make sure is ready is your deposit. Obviously, depending on the value of the property you want to buy, you then need to work out what the percentage, in this case, 20%. So 20% of that value, you need to make sure you have it ready. Um, in addition to the deposit, depending on where you are in the UK, there's what is called additional dwelling tax or additional dwelling tax. Now, this additional dwelling tax currently in Scotland is 8%. It used to be 6% as at last year, but as at January this year, the Scottish government increased, or December last year, the Scottish government increased it from 6 to 8%. And that's something to actually keep an eye on and look out for in the future as well, because government policy is always changing. So this current additional 20 tax, which is usually paid whenever anybody is getting a second home in Scotland, or if you are a business buying a property, you must pay this additional dwelling tax. So it's currently 8%. So that's something you need to also set aside. So there's a deposit, there's the additional dwelling tax, and then finally there's the solicitor's fee, which I mentioned earlier. So three things are important to buying your home or buying a buy-to-let house as a limited company. Your deposit, your additional dwelling tax, which is currently 8%, your deposit as 20%, and your solicitor's fee typically can range from 1,300 to 1,000 or less. Now, once you've covered or put aside all that, your solicitor will call you in at some point. Now, the process can typically take 1 to 2 months. Now, when everything is ready, the solicitor will call you in to sign your documents. Basically, just to ensure that since you are borrowing money, you are signing that if anything happens, you are willing to cover. Say your tenant is not paying, so you must cover the mortgage um um that mortgage interest that is on the mortgage, because now something I've not mentioned so far is that the kind of mortgage you get on a buy-to-let mortgage is an interest-only mortgage. Now, this is quite different from the kind of mortgage you get on your personal home. Now, the one you get on your personal home is a repayment mortgage. And with a repayment mortgage, you are repaying your home and center pay interest. But for mortgages you get for buy to let under a limited company, what you get is an interest only mortgage, meaning you will never pay back that loan. All you are paying is the interest. So you never pay off the loan basically. You only be paying interest, and then the only time you now need to pay back the loan is when, oh, you say you sell off that property. That is the only time you would then need to pay off the loan that the lender has provided you. That's the only time when you sell off that property. But aside from that, all you pay monthly is the interest on that property. The interest, sorry, on the loan, on the mortgage you've been given. For instance, you if you are given a mortgage of 50,000, the interest might be around 200 to 300. Now, the so that 200 you are paying is just the interest, and that interest you are paying every monthly. But the good thing, this is why you should also buy a company under a limited company. The good thing is that you can write off the interest as an expense for the company. You write it off as an expense, so that's not eating into your profit. So you can write off the interest that you are paying monthly on that property as part of the expense for the company, which is very important. This is why it is good to buy under a limited company. A lot of expenses can be claimed. Another one you can claim under a limited company is life insurance for the director. If you're a director, you can um, write off your expense as your life insurance as an expense. You can, if you use a room in your personal home, you can write off the expense for as an office. So those are the beauty about buying under a limited company. Now going back to the property itself, the buy to let property. So you sign document at the end and then go to collect your keys. Now, once you've done this, immediately you collect your keys, the next thing for you to do is to go to that property and every um check all the items there and check if as per what was agreed. For instance, is the boiler working? Is the gas cooker working? If it was agreed that they will leave it behind. Now, if it's not working, then you need to let the solicitor know. For instance, because the major expense is like the boiler. So if the boiler is not working, then they need to do something about it. They need to find a solution uh, to that, because that was part of what was included in the house that was being sold. And then finally, what you also need to do is to register as a buy to let landlord as a company. You need to register with the authorities. For instance, in Scotland, you just Google it, register your as a landlord, and then you choose the option to register as a company. And then, so thank you for listening today for this video. Till I come your way again, have a nice one. Bye bye. Thank you. Hi guys, thank you for watching this video. Now, if you like this video, please subscribe to this channel and also like the video. Now, when you subscribe, it will help you receive notification when I release more videos. My plan is to release more of such appealing and interesting videos. Now, if and that way, these videos will be able to reach more people that need this information. Thank you for watching.